Alright guys, today I want to talk about a little bit of intermarket analysis and the use of the standard deviation formula to pick your entry and exit points for your trades. Keep in mind this formula you can get through our store or you can DM me, and if you qualify you can even get it for free. So let's get started. Back a month and a half to 2 months ago, we picked the energy sector for long positions, specifically Chevron, Exxon, Royal Gold, and US Steel. Now, why did we choose the energy sector? Here we have the dollar index, and we took the trade right around this date. So we see a double top in the dollar index at around 97.7. We did expect it to go down based on economic data and other factors. So now that we know that the dollar is expected to go down, we have to look at bond prices. So this is the US 10-year Treasury note, and right around the dollar index top, we see a bottom in the prices and then an uptrend. This confirms inflation pressures are rising. So let's look at gold prices. So these are gold futures. Let's go to the daily chart. Get rid of open interest. We don't need that. So this is right around the time where the dollar topped. So we see a bottom in gold prices, which reconfirms our theory. And then, an uptrend broke out from 1200 to 1300. So, that's good for us. Let's go to oil prices. Oil prices did the same thing. Right as the dollar topped, we see oil bottoming at the 61% Fibonacci level. And now we have to look at something else, which is very interesting. Relative strength ratio for the US 10-year. So here we see the uptrend from the bottom and the top on the dollar, and this implies that oil is outperforming the bonds, which is going to be good for energy stocks and bad for financial stocks. We can do the same for gold. Same thing, we see the bottoming and then the uptrend against the bonds. Now, let's change the subject to the dollar. Now, DXY, apply that, and then here. So we see a consolidation in gold and then a breakout, which did outperform the dollar. So this implies that the dollar was dropping while gold was rising. So that is straight inflation. You can't argue with it. And so now that we know the sector that we want to work with, we have to pick the company. So let's go to Chevron, for example, and compare it to its direct competitor in the opposite sector, which is JP Chase. Now we see not that much of a breakout. We took the trade right around 113, which is right here, and then we rode it all the way to 119.75, 120. So that's good that it broke out, but it doesn't really give us that much insight other than, indicator divergence and volume and commodity activity. But if we go now to Royal Gold, we see a much better chart. We see a consolidation point, and then we see a huge breakout against JP Chase. So this means that while Royal Gold was on the rise, JP Chase stayed the same. And we can overlap the chart so you can take a better look. Current symbol, JP here. So they both consolidated, but while JP Chase dropped, like I think it was a 12% drop, Royal Gold went up. Hence the breakout in the relative strength. So if you went into the wrong sector, you see the two different outcomes. This is why, guys, intermarket analysis is so damn important. So now that we have the right sector, we have picked our stocks. We have to know when to get in and when to get out. So we realized this was a good trade a little late because we should have gotten in right here, but we got at 113. So we go to our standard deviation formula for CVX, we can expect a negative 1.4 and a positive 1.5% move each day. And we put it into numbers. We went in at 113 with a implied volatility of 70%, and we expected the trade to take 45 days. In 45 days, we can expect a $6.75 move with an upper bound of 119.75. Take a look at the chart, zoom in, and where is the resistance? 120.32, let's just say 120. Let's not get into decimals, but 120 is the resistance. And we were expecting that all the way from back here. Now, yes, anyone that knows technical analysis can determine that the next resistance would be this point based on this double top right here. But it's nice to reconfirm it with the math, as well as the downward move, because 106.25 would have been right around here. So here we don't see any real support from the chart, so that gives us an insight into where the stock is more probable to move, which is the upper bound based on the math. So guys, keep in mind that you always need to have an insight into what the world is doing, because there's no better example than this. If you went into the wrong sector, JP Morgan Chase went down while all these companies went up. So if you're in the right sector, you pick the right companies, and you have a clear expectation of where to move based on quantitative formulas, there's no going wrong, guys. I'm not saying it's 100% guaranteed that you're going to win this trade, but the odds are way better than just going about it in technical analysis and just randomly picking CVX for no reason. You know what I mean? So, guys, please share this with somebody who you think is going to help as well. And if you found it helpful, I appreciate the feedback, a like, a share, whatever you guys can do for me, I appreciate it. Guys, stay tuned for the next video, and I hope you could learn from this today and use it in your trading strategies moving forward. Thanks so much for watching. Stay tuned, and I'll see you guys in the next video.